Hey traders, I hope this week's smiling on you. I just want to bring to your attention a potential trading opportunity which is imminent. It's CAD Swiss on the weekly time frame. As you can see here on the weekly time frame for CAD Swiss, we are rapidly rocking towards this horizontal level here at 0.7731. Now this level hasn't been breached strongly since 2015. It's represented itself as a very, very good level of resistance, also known as a ceiling or a level of supply, where typically people who are long into the level will unwind at the level. As you can see, we have not had a close above it since 2015. So if you think about it logically, the bounce off this level to some capacity is far more likely than the breakout. Okay, there are a number of ways we could trade this short if you like the sound of this trade idea short. Remember that we've been ranging ever so slightly, making higher lows for the past 2 years. Okay, but don't let the fact that we're making higher lows over the past 2 years deter you from the potential sell, because this has happened very gradually, and by and large we have been ranging. I mean, we could really look at this also as quite a tight range. Okay, with regards to the prevailing downward trend, we can still say that given that we've got the moving averages still sloping downwards, that we are still ranging. We've got lower highs and lower swing lows, and we have done ever since 2007, 10 years ago. Wow. So this is, as far as downward trends are concerned, still in a downward trend. I mean, we are ranging medium term, and typically when we get a reversal, this can take quite some time. So this structure where we're seeing higher lows here could potentially be the start of a reversal, but if we look at the here and now and the interaction or the potential interaction with this horizontal level, then we could have an opportunity to sell for the next few weeks or months at least. Okay, so there are a couple of ways we could trade this one, and we have this on our watch list. The thing I like about this one is the fact that we haven't really had many false breakouts above the level, which is very unlike the case we've had with euro dollar. Please refer to last week's Market Insider with our prognosis of euro dollar. We've got a great horizontal level, just like we do with CAD Swiss, which I know a number of clients are actually selling off, but there's been some pretty aggressive breakouts in the past, and we're seeing some tails above the horizontal level. However, in the case of CAD Swiss, we haven't seen this really at all. So this enables us to take advantage of two trading strategies with regards to profiting from a potential reversal at this level here. For those people who like the idea of supply and demand trading, then there is potentially a high profit reward trade setup imminent, and this is simply having an order to sell on or just below the level with your stop loss at a point where we can reasonably anticipate price not getting to, i.e. above the level at some point here. The great thing about this strategy is that it enables us to get into the position at one of the most efficient price points, and that is key really in order to move our stop loss to break even and we be in purgatory for far less time compared to where we trade a price action based setup, which might not actually ever set up. So it enables us to get into the market. If we do enter on the level as a supply and demand style trade based on our power zone strategy, then we'll put our stop loss at a sensible place, maybe 100 to 200 pips away, it depends, or even 50, it depends on your risk appetite. But just look at the chart and visually pinpoint a price where if your stop loss is hit, then the actual setup, which has formed over the past 2 years, this structure which has formed over the past 2 years, is essentially invalid. Okay, so around about here, I would say behind the 200 moving average is quite a sensible place. Remember, if you're like us, you'll be risking 2% in the trade, and if we're targeting even this point here, that's a decent 8%, or a very comfortable 8% potential gain if we're in this. Okay, some who are slightly more risk adverse may just simply want to wait for price to get to this horizontal level and to get the confirmation of a bearish pin bar reversal, which is of course underpinned by a reversal on the 4-hourly, or indeed bearish reversal divergence on the RSI setting 6 or the stochastic 833 settings 833. The choice is entirely yours, but as far as vanilla power zones are concerned and trading off levels of supply and demand, we do potentially have a very good opportunity to sell off this level if, as and when price actually reaches it. Of course, when it does, we will let you know. And if we get a price action based setup, don't worry, we will let you know. But in terms of actually having our trap in the way of price, in place, it would make a lot of sense to simply place your order on or below this horizontal level so that there's greater chance of being filled. Okay, if you have the option, then a futures contract will be a little bit better than cash daily rolling, because remember that the interest rate in Canada is 0.75%, whereas in Switzerland is negative 0.75%. So you've got negative carry, which means that you'll be essentially paying a leveraged amount of 1.5% interest on whatever you have risked on the trade every night. Okay, I mean, it's not the end of the world at all, but obviously as traders, as business owners, we want to keep our costs down, so that might be bearing in mind. Otherwise, if you don't have that option, don't worry too much. I mean, the reward to risk is pretty good nonetheless if we're targeting conservatively this level here at well, just above 0.7200. Okay, so that is what we've got imminent for CAD Swiss. Do take a look at it and have a closer look and see what you think, but we think they've got potentially a couple of good trade setups on the horizon for this currency pair. Happy trading, folks.